Good morning, you're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's kick off with our top story. The International Monetary Fund and a UN think tank have slashed their growth forecast for the Philippines this year. That's due to continued restrictions and vaccine rollout uncertainty. The IMF now sees a slower recovery, pegging the GDP growth at 6.6%. This is slower than its forecast of 7.4% growth on October. On the other hand, the UN Department of Economic and Social Affairs trimmed its projection to 6.2% from 6.3%. The IMF said risks to growth include the country's vaccine program, saying the rollout will help boost recovery, but its progress and impact are subject to uncertainty. The government plans to start immunization next month. The multilateral lender also said social distancing and other forms of restrictions will persist this year, despite noting that the country has already seen a, quote, steady flattening of the infection curve since September of 2020. Now, in the region, the IMF sees the ASEAN 5 bloc to grow by 5.2%, slower than its initial forecast of 6.2%. Meanwhile, the UN Department of Economic and Social Affairs said the Philippines, together with Indonesia and Myanmar, are still struggling with high daily levels of new infections. It said a more prolonged period of mobility and weak sentiment will depress consumer spending and private investments. The UN agency said the country's GDP likely contracted by 8.8% in 2020. Those figures will be released tomorrow. Now, the country's trade deficit widened to $2.18 billion in December. That's as imports fell steeper than exports. Exports fell 0.2% year-on-year in December, even as economists expected a rise. Meanwhile, imports fell over 9% year-on-year, that's albeit rising on a month-to-month basis. And this brought the country's balance of trade of goods in December to $2.18 billion from a revised $1.73 billion in November. Still, that figure is lower than the $2.96 billion gap recorded in December of 2019. Okay, guys, checking in on the local unit. As of course, the peso has been trading in a tight range ahead of these wider than expected trade deficit figures. You can see on my terminal here, we are actually strengthening, closing in on 48.058 to the greenback. But as you can see on my terminal here, at least for the past month, we have been trading in quite a tight range, ranging from 48.03 all the way to 48.08. So really trading sideways there. Let's move on over to equities here. We did see a bit of a rebound, at least at the market open, when we were looking at Asia. This despite the fact that you've got Wall Street overnight closing in the red with the Nasdaq down by 0.07%. However, after closing traded over in the United States, you actually had earnings reports coming in, particularly from Microsoft. So it does seem that those contracts are jumping following that strong earnings report. So the futures over in the Wall Street Nasdaq does seem to be on the rise. Now let's take a quick peek at how Asia is opening here. As I mentioned, a little bit on the back foot, save for the Nikkei 225, which is staging some gains here, up by 0.6% together with the Topix over in Australia. However, a bit of a pullback that's down by 0.7%. You're also going to be seeing Singapore, however, swinging in positive territory. That's up by 0.7%. Now, how is our local index doing? We slid below that delicate 7,000 support level yesterday, and take a look at that. It seems to be going in the downward momentum spiral here. We are opening down by 1.7%. We are now at 6,800 levels we haven't seen in several weeks actually. And recall that we were already down by 1.3% yesterday. Now, this according to Phil Stocks. Markets are investors are unloading their shares. This, of course, as we reported yesterday, that there is now the local transmission of the new COVID-19 variant that was in Bontoc Mountain Province. So there are now 17 recorded cases of that new variant, and this has led to stricter worries, rather, of a stricter lockdown that might be happening. Recall that President Duterte also reversed the easing of minors to be going out, he has put back that restriction. So this now brought the year-to-date decline by 2.3%, and now seems to be going even further in the red. Another thing to be worried about is yesterday foreigners had sold more than $10 million worth net. That's the eighth straight day of withdrawals. Now let's take a quick peek at some of the stocks to watch this morning. One is Macroasia. They had already been feeling the pinch here and feeling a bit of a sell-off, asked questions concerning whether they would still maintain that Sanli Airport bid started coming in, and now it's official. Philippines has now canceled the airport award to that Lushotan consortium of Macroasia and China's CCP. So this is from the provincial government of Cavite. Of course, they've canceled the notice of selection, and also no reason was provided for this. Now, recall that they had asked for the deadline to submit documents to be extended 3 times. And take a look at the Macroasia stock now trading at the open down by 12.3% on the back of this news, a confirmation of a lot of worries of investors that has already been down for 3 days by 22%. And another one, of course, I'm just very curious to see is Megawide also in the same boat here. They recall that MIAA has rejected their appeal for them to rehabilitate the NAIA airport, and that had already also been seeing the same sort of decline in the past few days here. Take a look at Megawide this morning, down by 4.1% and down by more than close to 9% in the past 3 days, trading just above 7 pesos and 20 centavos. Now let's move on to banks, which are also in the limelight this morning. This as the Banco Central has received some complaints from consumers saying that the banks are not necessarily complying with the Bayanihan 2 provisions of extending the debt moratoriums, and the BSP has ordered the banks and credit card issuers to strictly comply with these laws that, of course, grant temporary reprieve to the delinquent borrowers. So this is from BSP Deputy Gov. Chuchi Fonasher. She said that they have received a big number of credit card related complaints. Now, this comes as the Credit Card Association of the Philippines says they expect a further increase in the delinquency rate. The latest data, this is for end of September 2020, showed that the credit card delinquency rate is stood at 11.5%. That's more than 2.5 times the level on the same period of 2019. Banks down by close to 3% at the open. Now, here to chat with us about these developments and more, we've got Royce Aguilar of First Metro Securities. Good morning, Royce, and welcome back.
Hello, good morning, everyone.
Okay, right. So a lot of things to discuss here. Let's kick off with the index and how that's going. We broke through downwards the 7,000 level. It seems to be going on that downward momentum. And now with those trade figures coming in, what's your expectation today?
Well, for us, well, of course, the market is currently down by 2%. Just to talk about the price action and where the price should hold, I believe it should hold 6-8 levels. I mean, looking at technical analysis perspective, when it breaks, should the market break below 6-8, it could result to further correction, even touch the likes of 6-6 and then 6-4, right? So it's very important that it bounces in the next trading sessions. Of course, we prefer to see news, for example, developments on the vaccine side, um, probably signs of further reopening, if any. So those are your catalysts now from here on, because the market did drop significantly last year because of COVID. So what would make it rebound further is developments to combat the said pandemic.
Okay, let's talk about how the trade figures might actually impact this. Our exports are down compared to an expectation that they would be rising here. The imports are also, down more than what was expected even. What does that mean when it comes to the growth prospects of the economy, when it comes to external trade? Are we highly dependent on that, and is the movement of our index reliant on this?
Well, I think it combines into other data. Of course, looking at the trade data is one. Of course, like you've mentioned, exports already went up in the previous data, and now it's down again, as you've mentioned. So now what would make the market go up is, as mentioned, is signs of further reopening, or signs of, for example, better manufacturing data come next week. So there should be signs, because, for example, in the manufacturing data, we already hit around 50 last September. So, and now it's back again below 50, which means the manufacturing sector is contracting. So that combined with other data should improve further, because now the market probably has come into senses that it the country may not recover as fast as initially expected.
Mhm.
But for us, we continue to tell clients to look into companies that are beneficiary of further reopening. But you just have to be patient with it, because it is dependent on vaccine procurement and also further reopening, which the government is trying to figure out right now.
Royce, the expectations for the GDP print for 2020 in the fourth quarter are so widely dispersed. What
Right.
is the market pricing in? What's going to constitute a better than expected, or a rally, so to speak, and what might bring the index even bigger?
I think for the GDP, I think when we observe the past data, or the past reaction to the past data, it's mostly muted. Remember when the market when the GDP was released at around the bottom, the second quarter GDP, the market even, I believe, went up at that point. So moving forward, I think at the end of the day, it's about, number one, will it meet expectations? If it's just in line with the wide range, the market will not move. Um, but for example, if it's surprised to the downside, significantly surprised to the downside, or if there are sectors that surprise to the downside specifically, we will see several sectors specifically affected. But for now, I think GDP is usually a thing in the past. So moving forward, for example, if there are statements from Jokno saying that the GDP can be better this year, or at least
Hmm.
better than initially expected, that could result to the market rallying. So
Okay, so forward looking na now that's already been priced
yeah,
in. And finally, Royce, let's talk about the airport situation. Mukhang wala nang ina-award ngayon, di ba? Is this
yeah.
specific to the companies themselves? Does that show that they have, financial incapacity, so to speak, to go through with those plans? Or is this something that's a one-off? They can Megawide, for instance, has said they can focus on other bigger projects anyway.
Okay. So for the likes of Megawide, Macroasia, I think they have somewhat a different situation. So for Macroasia, it's more on the documents. I believe Cavite governor mentioned yesterday that um, they may have not fully and completely complied with the PPP's condition. As for Megawide, it's more on several other issues. Not That's not related to document per se. So I think it's a it's a it's an isolated case for both of them. And keep in mind that, for example, San Miguel, they don't see. I think as of now they don't see any problem in their Bulacan airport. So I guess one is they have already that wide or long experience. Plus, of course, it's given that they have enough funds to cover for the expenditures for the airport. So I guess if
Are you still
initially
bullish on the
kasi
two
yeah.
two companies, Royce, at the moment?
Well,
When
well
is the time to
for
be coming in?
yeah, for us kasi si
Dropping.
Megawide, of course, half of its operations are for related to airport, half of its construction. We're bullish on the construction side, and on the airport operation side, we're bullish, but we have to be patient, because I think the tourism side will take a bit longer to recover compared to the other sectors, the likes of property, construction, financials, which we expect to recover like sometime this year already. But for the tourism side, maybe sometime next year. So it's a good case of buy a bit now and then accumulate further later. So something that we tell to clients regarding Megawide specifically.
Okay, so bullish but be patient. Thank you so much for those insights. That was Royce Aguilar of First Metro Securities.
Thank you.
Here are the other headlines we're keeping our eyes on. The BIR collected almost 7.2 billion pesos in taxes from POGOs last year. That's even as some offshore companies reportedly left due to tighter tax rules. BIR Commissioner Cesar Dulay said taxes from POGOs were 12% higher than 2019 collections. Deputy Commissioner Arnel Gubalia attributed the higher POGO tax collections to additional revenues generated through the 5% franchise tax. Now recall that POGOs were required to settle their franchise taxes before the Bureau allowed them to resume partial operations during the ECQ. Meanwhile, the Bureau said it collected 86% of total 2020 payments through electronic payment channels last year. Furthermore, around 94% of tax returns filed last year were submitted online, this after the pandemic shutdown or reduced the operations of face-to-face channels. Maynilad has completed the replacement and realignment of 6.7 kilometers of its pipelines in 2020. That's to assist the government's infrastructure projects. In a statement, the West Zone concessionaire said primary and secondary pipelines were reconfigured in portions of Caloocan, Quezon City, Valenzuela, Parañaque, and Las Piñas. The changes were done to give way for the ongoing construction of the PNR North, MRT-7, and the LRT-1 extension. Maynilad provides water to areas in the west zone of NCR, including Pasay, Parañaque, Muntinlupa, as well as parts of Cavite. All open dump sites are set to be shut down by March. This was the order given by the Environment Department to its regional offices across the Philippines. DENR's Benny Antiporda was tasked to take charge of this endeavor. That's as the Undersecretary leading Solid Waste Management and LGU concerns. The department also announced that even before the directive, it had already closed 38 open dump sites in one region on a single day. The National Solid Waste Management Commission has so far shuttered 152 dump sites, mostly in Tanza, Cavite. But an estimate of 233 open dump sites are still operating as of the end of 2020. And that's a first look into the business day. Today is Wednesday, January 27, 2021. Catch Business World Live for the market close. That's at 3:15 p.m. today. I'm Danie Laurel, and we are One News.